We've seen central banks take some action, notably the Federal Reserve last week with a 50 basis point emergency rate cut. But you say it needs to go further than that. It has to come from the fiscal governments as well to address that. My question is, at what point do these governments start to implement these measures? Because everything is still so much in flux, and how effective can any measures be when we don't know what we're dealing with here?
I mean, this is a health crisis with significant economic impact. We know that growth this year is going to be lower than 2019, and 2019 was already the weakest in 10 years. So there is a need for urgent action, and it's not just targeted policies, but substantial targeted policies. And in this particular case, you could think of fiscal policy as being in the driver's seat, because that's where you can do a lot more targeted policies. But you have to, there's a role for banks, and there's a role for central banks, there's a role for fiscal authorities, there's a role for financial regulators. I mean, targeted policies that are tailored to particular sectors, particular industries that are very badly hit are the need of the hour.
So, Geeta, when do we see all of those roles actually come together in some sort of coordinated action? On one hand, you have people like Bruno Le Maire saying we need this massive coordinated response, and then you have economic advisors here in the U.S. like Larry Kudlow who say something a little bit more micro might be necessary. When, if at all, do we get everyone on the same page here?
I mean, there are many countries that are already taking big measures. So you've seen that happen in China and Italy, South Korea. Even the U.S. announced this over $8 billion package for dealing with this crisis. But there is certainly a need for countries to now move much more quickly. The greater the collaboration, the more stronger the impact will be on the global economy. And it's necessary to do that on all fronts, to do that in addressing the health crisis first, which is what it is, to make sure that you're protecting people, to make sure you have the right healthcare systems working, and they're working well. But these other measures that come through liquidity provision, through helping small and medium enterprises, through helping families who are maybe losing jobs, I mean, all of this has to be addressed very urgently.
You know, what is the IMF doing to facilitate the coordination of these kinds of measures? I mean, you're calling for something coordinated, international, and from individual governments at a time when there's not a lot of appetite for countries to work with each other. The level of distrust is higher than it's been in decades. What kind of role does the IMF play there?
So, yeah, we are playing a very active role over here. We are in constant touch with all of our 189 members to see what their needs are. Very recently, we had a call with the IMF's governing council. This was on March 10th, where we discussed different policies that countries can undertake. So there is a coordination. There is action being taken. I mean, it is the case that central banks are speaking to each other and figuring out what needs to be done individually and globally. So there is momentum building up, and we are in there. We're supporting the buildup of this momentum.
So, Geeta, can you give us maybe some specific examples of policies or changes that you think would be most effective? Some people have talked about various forms of tax relief. There's been issues of just giving out cash, similar to what we saw in Hong Kong, wage subsidies. There are a lot of measures out there. It's not really clear, though, what's going to be most effective.
Well, I think the first order of business has to be spending for the health system, to make sure that there is adequate testing, adequate treatment, and to make sure what resources are needed for the healthcare system. I think that's number one. Then, of course, one has to take into account that this particular crisis has affected some sectors far more than the others, which is if you look at transportation, travel, entertainment, those sectors have been hammered. And there you can think of targeted lending, you can think of forbearance in terms to borrowers, extending maturities. There is need for cash transfers, as you mentioned, wage subsidies, tax reliefs. And now there are countries around the world that are doing specific measures. But again, those are the kinds of actions that will be needed.
So, Geeta, though, I mean, we're starting to see some of that play out in the U.S., and we're definitely seeing a lot of chatter in Europe. Obviously, the IMF deals with a lot of countries that are maybe the next tier down in terms of their abilities, in terms of their financial quality. How do you sort of assess some of those nations across Latin America, across Asia, that don't have the might of a China or the fiscal power of the United States?
I mean, so these are difficult times for the global economy, and many countries are going to be hit. There is, of course, tremendous uncertainty how big the hit is going to be. But with the kind of financial market turbulence that we've seen, with the big collapse in commodity prices that we just saw today, I mean, there are countries that rely very heavily on commodity exports, and they're going to take a big hit at a time when many of these economies are not in the best of health.
When you look at oil prices and how much they've collapsed overall, is it a net positive or a net negative for the global economy?
Well, if we try to think of what happened in 2014 when there was a big price collapse, it was a net negative for the global economy. So while there are countries that benefit from cheaper oil prices because they're importers, the big negative effect that comes from oil exporters seemed to dominate. And so overall, it was a net negative for the global economy. And it could still be that way this time around, too.
Yeah, it certainly could be. I want to get from you as well a comment from Scott Minerd of Guggenheim. He had tweeted earlier today that the market, judging by today's price action, is finally waking up to not just viral contagion from the coronavirus, but also to financial and geopolitical contagion and to the knock-on effect to corporate earnings and cash flows once the world enters a recession, which now appears to be inevitable. Geeta, do you see a global recession as inevitable? And if not, what would prevent it?
I mean, the global economy is going to slow, and is going to slow quite significantly. Like I said, it's going to come down below our 2019 numbers, which was at 2.9%. And the question is, where does that settle over here? But I just want to flag one thing, which is that this is a transitory, a temporary crisis. I mean, the nature of it is that it's a temporary crisis. So it's very important that policies respond quickly to prevent this turning into a permanent crisis. If all goes well and the necessary actions are taken, then 2021 would see a strong recovery. But we need to move fast now.